And joins us now. Chris, good to see you there. Look, I wanted to ask you about trading overnight. We did really see the US pick up some momentum towards the last final minutes of trade.
Yeah, that's right. I think there were some comments came out towards the back end of the day that Boehner and Obama would continue working together. I think that was enough in some pretty light volumes to push markets higher. S&P closing pretty much at the highs of the day. But we are going to have a vote tonight through the House for the Republican vote there on that so-called Plan B, and you know there's a good chance that, according to different Republicans, that will pass. Yeah, that to me is more a sort of symbolic gesture to the Democrats and to the public to try and side with the Republicans. But yeah, it's still a very open game at the moment. The market seems to be giving the Republicans and the Democrats the benefit of the doubt, and certainly not pressuring them in any shape or form to get a deal done. I think that's probably interesting. If you look at the S&P, as I say, closing at the high, the data we saw out of the US last night was very strong. The GDP number significantly higher than what it was expected. Part of the reason why we did see gold coming off quite sharply. That was at 3.1. You can look at the Philly Fed numbers, better than expected. The housing starts numbers, or the existing home sales numbers, better than expected. The other bits and pieces that came out, personal consumption 1.6%, expected at 1.4%. All these things were good, and I think that's why we saw the 10-year pushing back up from 176 up to 180 as well. Stocks really liking that. But I think as well, probably the bigger thing that we can look at prior to pre-market was the Bank of Japan. Didn't have a big impact on US trade, of course, but dollar yen, we've been advocating to clients buy dips in dollar yen, buy dips in buy dips in the yen crosses, and that worked out quite well. I mean, we saw dollar yen trading below 84. Business as usual with the Bank of Japan. I think everything that most people had expected came to fruition. We weren't calling for an asset purchase program increase at that meeting. We were expecting one in January. We're a little bit disappointed by that. But unfortunately, everything else seems to be as what the markets had been expecting. So, yeah, it did seem that buy the dip strategy seems to be working there. And I think as a result, the Nikkei will do very, very well today. We're calling up over 100 points on open there.
And Chris, just looking at the metals prices, we did see gold, silver and platinum all much lower. Gold falling below its 200-day moving average, silver falling 4%, platinum down 2%. Why are we seeing such strong falls?
Well, a lot of people were saying it was down to the GDP number in the US last night, which I guess has some merit. The fact it came out at 3.1%, but unfortunately the Fed aren't really tying its monetary policy stimulus withdrawal on the GDP number. It's obviously doing that on the employment numbers and the inflation numbers. But of course, if you're getting stronger growth, inadvertently you are going to create jobs, and inadvertently you are going to create inflation further down the line. So I think that's where the loose connections come through. If you look at what happened after the GDP number, we actually saw euro dollar moving up to test the 133 level. Gold prices have silver prices have clearly lost that correlation with euro dollar in recent times. And as you say, I mean, it traded through the 200-day moving average first time since August. Silver is also through the 200-day moving average. It's also through, if you look at the big rally that we had from May to October, we also got through the 50% retracement level of that on gold. I actually think the bigger issue for gold right now is what's happening with capital gains. Gold and silver more so everyone has been sitting on some massive profits in gold, and capital gains in the US are going to be going up from 15%, potentially between 18 to 23%. If you're working on the top end of that, wouldn't it just be prudent to realise some of those losses, realise some of those gains now, pay 15%, then hold on to it next year when the Fed, towards the back end of next year, could be looking to rein in some of that stimulus. So, gold prices come under pressure. So I think that's the bigger driver. All accounts, last couple of days has been, well, last night there was one massive US fund who had been liquidating positions in a very thin market. That didn't help. So, yeah, I think that's the issue. Whether or not, gold in January regains a footing, finds some support after this sort of capital gains loss selling is going to come through. We know the old issues of balance sheet expansion, money supply expansion, which should support gold, as well as the negative real rates we're seeing in a lot of Western economies. So perhaps this dip can be a buying opportunity. But I think there's been a lot of damage done to the precious metals suite over the last couple of days, and I certainly wouldn't be buying in at the moment.
And what does all of this mean, and the trade that we saw overnight for the ASX? I mean, the SPY certainly pointing to a stronger open.
It is, yeah, but I think we're also taking 7 points out of the market this morning because there's a suite of companies going ex-dividend. The market should drop by that amount on open as well. So I didn't see any major names in there, but I think we're still expecting a positive open, albeit modestly. I think you've got to look at Macquarie. Citigroup was up at a 52-week high last night, but Morgan Stanley as well. So clearly Macquarie, which is up over 40% year to date and is looking very, very strong and a very strong uptrend. It should do quite nicely on open. BHP, which failed to close in positive territory yesterday, had it done that, and Rio, it would have been up 12 days in a row. BHP's ADR this morning is pointing to a modest open. We've got iron ore prices still unchanged at $135.50 per metric tonne. Copper prices are down about 1.5% from where we were yesterday. I mean, all eyes on Oz Minerals again, and I think Billabong's going to be a focus as well, given their CFO left post-market yesterday, and they can feed into the idea of the future uncertainties there as well. So I think Paul Bryant stepped into his place. But yeah, I mean, I think I heard you say that Julia Lee was saying that there was going to be light volumes. I mean, that seems pretty obvious at the moment. I think next week even more so. You're looking for about $1 billion, maybe $2 billion of US dollars of value next week. So yeah, position squaring going into the end of the day. Not a huge amount to look through tonight. I think we've got an Italian budget which is expected to be passed. You've got German consumer confidence numbers. You've got some bits and pieces out of the States with the University of Michigan numbers. And of course at 11 minutes past 10 tonight, we all perish anyway. So we don't have positions to come in on Monday anyway. So
I hope you're still here for Christmas, Chris.
And you. Happy Christmas.
Thanks, Chris. Well, there's relief from economists after the federal government